Powerful candlestick pattern to make money in the market. Hey guys, welcome back to Tradingfyive. This is the channel that provides you various informative content on the stock market as well as technical analysis. So our today's video is completely based on candlestick pattern, wherein we will discuss few candlestick patterns that are really powerful and will help you make some bunch of profit in the market. And in this video, I am gonna tell you that how will you identify those candlestick pattern, where to buy, where to place the stop loss, how to use those candlestick pattern, and most importantly, when to avoid trading on those candlestick pattern. And this one thing is really important and applicable to every indicators, every pattern in technical analysis. It's like we just study the pattern, we just study how to use it, but we never see where to avoid trading on these patterns. And in this video, I will surely tell you where will you avoid trading on these patterns. So make sure you're watching this video till the end. Do not skip this video. And one more thing, if you are new to this channel or not yet subscribed to this channel, make sure you do it so that you won't miss any update, any video on the market on our channel. So let's start with candlestick pattern. Now, if you have watched my video on candlesticks, wherein I have discussed the complete basic of candlesticks and candlestick pattern, like the one candlestick pattern, two candlestick pattern, or the three candlestick pattern that are formed using the three candles. And if you haven't watched the video, the link is flashing in the I button or I have provided it in the description. You can watch it after this video. So this video is all about three candlestick pattern. These candlestick pattern are very powerful and they will help us identify a bullish reversal or bearish reversal in the market. Now, if you are not familiar with the term reversal, reversal is something which you called as a change in the trend, change in the direction of the market. And as you see on your screen, that's what you call as reversal. You see the uptrend is changing back to downtrend. There is a change in the trend which is called as reversal. And our first candlestick pattern is morning star pattern, which is a bullish reversal pattern. And bullish reversal is just like the downtrend changes back to uptrend. The market starts moving up. Now let's understand about this pattern. The first candle in this pattern is a complete red bearish candle where you see the bears are taking control over the market. And after the red candle, a doji is formed. And doji means the candle which have a very small body but a huge wick. And after the doji, a complete green candle is formed, which is of course bearish in nature. And this is what completes the pattern, the morning star pattern. Now if you observe carefully, the red candle shows the bearish dominance over the market. And then comes this doji which shows certain indecision in the market. Now indecision means neither the bulls are taking control over the market nor the bears. There is something you can say a war going on between bulls and bears. And whoever wins will get to control the market. And after the doji, you can see a green bullish candle, which shows the bears have lost the control and bulls have taken its dominance. Yeah, that's what you call as morning star pattern. And in the case of morning star pattern, you will look for buying the stock on the candle, which is formed just after the pattern. You see on your screen, that's where you will look for buying the stock and you will place the stop loss just below the low formed at the doji. You see, that's quite simple. Buy on the next candle and place a stop loss just below the doji. And in this case, you will have a very minimum loss, but your profit against the loss in this trade can be really fascinating. And that's what you see is morning star pattern. And one thing necessary for morning star pattern is that it should be formed after a downtrend. You see, in a downtrend, the bears have taken the control. And when the morning star pattern occurs, the control is shifted to the bulls. So you see, you will observe this pattern only when it is formed after a downtrend. A morning star pattern which is formed in an uptrend or in a sideways trend or somewhere randomly should be completely avoided. You must not trade on the pattern which is just forming randomly. There has to be a cause, there has to be a purpose for the pattern to be formed. Okay, so the next pattern which we have is evening star pattern. Now this pattern is also a three candlestick pattern which indicates a bearish reversal in the market. You see, in the case of evening star pattern, you have a green bullish candle at first, which shows that the control over the market is bullish. And then comes a doji just above the green candle. And after the doji, a big red candle is formed, which shows that the bears have taken control over the market. You see that the green candle shows a bullish movement. And after that, the doji which is formed shows indecision in the market. That is, there is no control over the market, neither the bulls or bears are strong. And after that, a red candle is formed, which shows that the bears have taken control over the market. Now in the case of evening star pattern, you will look for selling the stock just after the candle which is formed after the pattern. You see, that's where you will short the stock, you will sell the stock and you will place a stop loss just above the doji. So that's your loss and you can expect a very good profit, a very good reward against it. And just like a morning star pattern should be formed after a downtrend, the evening star pattern should be formed after a complete uptrend. That's what you might be seeing on your screen, that in an uptrend, the bulls are strong. The bulls are controlling the market. And when the evening star pattern is formed, the control is shifted from the bulls to bears. And an evening star pattern which is formed randomly or in case of downtrend should be completely avoided. Next, let us look at an example of one of these patterns. Now, as you see on your screen, that's the daily chart of Nifty 50 index. And here you can spot a pattern which is called as morning star pattern. And we know that this pattern indicates a bullish reversal, that the downtrend will change to uptrend. And here you can see that the pattern is also formed after a downtrend, which increases the accuracy of this pattern with greater confirmation. And next, everything is all on your screen. A good uptrend move can be seen over here. So that's why I call this pattern a very powerful pattern. Because if you can determine the risk to reward ratio, here the risk will be very minimum, but the profit against the risk is really marvelous. Okay, so that's all in this video. Thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible so that you do not miss any upcoming update on the market.